Well, investors are awaiting earnings from Microsoft after the bell. It's going to be a big deal. Earnings per share expected to rise 10% from a year ago, with revenue up 18%. Jonas Ferris, MaxFunds.com co-founder and an FBN contributor, joins us now with the preview. Good morning. Great to have you here, Jonas. Always good to see you. Let's start with those earnings. This is a big pop here, right? And we've seen the NASDAQ on Tuesday hit a record high. Now, I know you're no big fan of Microsoft. Do you think the stock will do well today? Do you think there's any possibility they'll surprise us on the upside?
Yeah, they wouldn't let me log into my laptop with on the plane yesterday because the office has the subscription fee, which is one of the big drivers. This company really transitioned out of a 90s business model very well. It doesn't matter what PCs are really doing so much as office subscriptions, as cloud computing is a huge area where they compete with Amazon very successfully in some recent better acquisitions than in the past.
All right, so it could be a big day for this company. But one of the things I'm watching, and you just mentioned it, cloud computing, now Microsoft doing a big deal with Walmart. Walmart announced it yesterday, but it's really Microsoft's big win here. Tell me what you think of it, what you make of it, and how you think it's going to work out for this company.
This is very interesting more for Microsoft because they're a perverse beneficiary of Amazon steamrolling into everyone else's business. People need cloud computing. Competitors of Amazon or future competitors of Amazon, because we don't know where they're going, don't want to do all their cloud computing and AI and everything else with their competitor Amazon. So they're going to go with Microsoft, number 2 player in this area, even ahead of IBM. And that is a benefit to Microsoft, who has no plans to get into all the stuff, groceries and everything that Amazon is rolling into. So again, this is kind of a Walmart cannot do this business with Amazon, needs to do this business, and there's Microsoft as a beneficiary.
Right. It's a big, big business. They're doing well there. It's not just that they just happen to stand in the way. I mean, they're actively going after it. I want to switch up, though, to tariffs. Maria Bartiromo interviewed the CEO of Microsoft, Nadella, this week, and he was talking about the White House's plan for tariffs. Listen.
I'm hoping that we'll come back. I think the president has said that what he wants is fair deals. And so I hope that as we negotiate them, that we come back to a stable environment.
So Nadella also told Maria that it's very important to protect intellectual property, IP. Tell me what you make of his comments about tariffs. You know, all of these companies stand to lose or gain in some of this. It's very complicated to follow. What do you say?
A company like Microsoft benefits more from the IP protection. They don't take on directly the risk of like an aluminum tariff, but they do get hit when the whole economy drops. They sell installed bases of software. So if the economy is dragging, if a company that deals in metal has to fire people, has to shut down workstations, that does cost Microsoft money. They prefer the free flow of information. But to them, the upside exceeds the downside in some ways because they are an IP company and they don't need pirated software, all the other stuff that tech companies face with China.
It's interesting you bring that up because Maria asked him, you know, we understand that in China, much of your software is simply pirated. So the expectation that China is the next big thing for Microsoft, maybe not. But I want to bring you to something from the Beige Book yesterday. The Federal Reserve really looking at the impact of tariffs on the economy, and they're starting to talk to some of these industrial companies. Here's what the Philadelphia Fed District said. One machinery manufacturer noting that the effects of the steel tariffs have been chaotic to the supply chain, disrupting planned orders, increasing prices, and prompting panic buying. Now, what I think is so interesting about that, I wonder if the expectations for this pop in growth as much as 5% GDP this quarter, maybe it's people trying to get ahead of tariffs.
Yeah, it's like a hurricane when you see everyone buys it. They're having a great sale of gasoline. You can't buy any. It's not really a good thing. You know, the Federal Reserve is watching the potential tariff war probably closer than they even need to and are very scared that it could lead to economic drag that would counter the need to raise interest rates. They are probably keeping interest rates a little lower than they would without this threat of a tariff war, which is actually boosting stocks and everything else. So, you know, how much worse it can get, they don't really know. These price increases are not inflation. In fact, they're the anti-inflation. They lead to a slower economy.
A lot of people agree with that, Jonas, but it is highly debated with the White House. Thank you for that. Great to see you.
Thanks.